I do want to bring in our next guest, though, talk more broadly as we are kicking off a new trading month here starting December out. Joining us this morning, Ted Thatcher, president of Bright Lake Wealth Management. Ted, thank you for being with us on this Monday, kicking off our final month in the calendar year of trading. You know, I'd love to just talk about this past weekend. We've had our biggest, busiest shopping time. We had Black Friday. We're now in the midst of Cyber Monday. You know, as far as expectations and the numbers that have come across, you know, what are some of the trends that you've seen?
Great to be with you, Marley. Yes, this holiday season is really interesting. It's almost like income level is more of a determiner of how holiday spending is going than just the amount percentage discount that we're seeing, whether it's in person or online. There's this bifurcation that we're seeing with the consumer right now. When you look at the data, we saw consumer confidence drop. We saw, the unemployment rate continuing, claims kind of tick up last week. And so there is some instability there with the consumer. And so when you look actually at the retail sales numbers, they came in a little soft as well, up a little bit. But after the last readings, huge number, I think we expected more. And so when we dig underneath the hood and actually look at the details, we see those actually earning more than $150,000 are expected to spend more this holiday season. And of course, the lower income tier being hit hardest, really trying to tighten the belt when it comes to their holiday spending.
To have this conversation about this bifurcated economy, this K-shaped economy. But you mentioned, where the primary spending is in this category of people making more than $150,000 a year. As they plan to spend more, what areas are we seeing them gravitate toward? And how does that shape where we're going to see retail strength?
It's a great question. I mean, of course, we see online and e-commerce push higher and higher. It's not a retail in-person world anymore. We've talked about Black Friday for years. And of course, we think about the lines outside of Target and Best Buy over the years. And the truth is the post-Thanksgiving holiday shopping really is online now. Year over year, online spending is now up 9%. Again, spending on the whole is up this holiday season, about 4%. Some of that, of course, coming from a little bit of inflation and some, of course, coming from more demand. And so, again, when we put our eyes on that category that is spending more, when we think about opportunities, of course, we want that durable cash flow. We want that consistency. And so premium spending is really what I'm focused on in terms of opportunities. Of course, Costco comes to mind. Most families that have a Costco membership are dual income households, typically hitting that higher range of income. Also, of course, when you think about those premium brands, LVMH also comes to mind there.
And so as you look across this sort of more premium brand, and we're also starting to hear from some of these premium brands that they are not going to do any sales in this holiday season. They're not going to lower their prices. They're going to demand that premium price tag from these shoppers. As far as that approach, what are your expectations for sales in Q4 for those companies that are saying, because we're seeing this bifurcated economy, because we're seeing these higher income earners spending more money, we don't feel the need to participate in the sales. But we're also being told at the same time that everyone, including that more affluent customer, is searching for a deal and they're treasure hunting more than ever.
Absolutely. I mean, ultimately, when it comes to selecting companies like this from an investor standpoint, what we're looking for ultimately is durable cash flow. Whenever we look at, returns and upside in investments, we always think about that side and not always the risk side. And so when you see companies, like the premium brands, LVMHs of the world, not going to just slice for discounts, they're having the consumer come to them a little bit. They're trying to maintain that status. And so ultimately, I think that that's a good thing from an investor standpoint. With all the volatility we've seen this year, all this talk about the AI trade, very well warranted. Going into the holiday season, maybe investors don't want all that volatility. And so durable cash flow that's going to be there is really what my eye is on, maybe kind of underwriting some of that risk on the volatility side a little bit more than just the upside we've been focused on for so much of this year.
So, Ted, if you're looking at cash flow, and we're focusing now just specifically on the rest of the holiday spend season, so really just a couple weeks here, what would you say is the single most important metric that you're going to be watching that's going to indicate to us either how healthy or how fragile the holiday shopping season really is going to be?
Again, a great question. I think, of course, questions from a data standpoint all point to what the Fed's going to do in terms of potential relief for that lower income, average American family household. But with the holiday spending season, what my eyes really are focused on is the retail sales numbers and ultimately consumer behavior, consumer confidence. Obviously, keeping a close eye on that. And really, again, where their behavior actually points to. So e-commerce comes to mind here as well. The Amazon we were just talking about has, of course, the cloud argument to be made, but also they are serving the broad spectrum of the consumer economy. And so those types of companies are really what I have my eye focused on and how the consumer is ultimately behaving.
And you mentioned retail sales is an important metric, and when we strip out gas station spending out of the most recent data, they were basically flat. I mean, we're not seeing a lot of growth here. As far as when you look at that, do you see that as just a temporary pause, or do you see this as an early sign of some potential issues we're going to see with the consumer?
I think it's a great question. I mean, obviously, we had a huge number. The prior print, almost double what was expected. I think this most recent print was actually just coming back to earth a little bit. You're absolutely right. Really, the growth, if you will, that we saw there was really just around gasoline and energy. I don't think it's the end all be all for what we're going to see throughout the end of the year. Ultimately, I think it's very likely that spend will continue. When it comes to the consumer in the United States, I think we don't always give them the credit that they deserve. The United States consumer has been a very, very durable, reliable party for decades, even in times that have been a little bit more dicey.
Thank you so much, Ted. We appreciate you being with us to talk about this busy holiday shopping season. We had our Black Friday, some of those numbers starting to come to us now. But of course, Cyber Monday happening today, so we'll be waiting on those. But we appreciate you being with us to talk retail trends and the consumer. That's Ted Thatcher, President, Bright Lake Wealth Management.